Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning and welcome to Forex.Today. So once again, good morning. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Swing on by TradersWay and open up a demo account. Give us a try. You can choose between 3 different types of Forex trading accounts. One is a traditional spread type account. Another one is a variable spread. And the third one is for ECN, so whatever you want. There's pluses and minuses for each. If you want to know the differences between the 3 besides the spread and the pricing model, I'm not a salesperson, so I can't go through all those details with you. I wouldn't know. But I prefer variable spread, if you care about such things. But why don't you contact our support staff and ask them the differences, the minute differences between the 3, and they'll be happy to explain that to you. Why is that? Perhaps I'm just old school. I don't like paying commission. That's I don't know. So I like spread. I don't want a fixed spread traditionally because most of the time a fixed spread is a little bit higher, right? And therefore a variable spread is a little bit lower. But then around news events, it can widen a bit, but not dramatically. So it's sort of in between. It's just, like I said, just sort of old school. Maybe I'm a monkey head for it, but that's what I like. So anyways, I do these sessions every day, 7:30 in the morning here at Forex.Today, Monday through Thursday, anyways. Every Friday at FX Street, where I'm Forex Speaker of the Year, which is proof of the pudding that your loyalty is greatly appreciated. Oh, is that right there? Jimmy's got it. Yeah. It's not on here, though. Here's just the different comparisons. What's probably not in here, let me look at it. Fixed, standard account, no limitations, no limits, 2 pips, blah, 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 blah. So see, the nice thing about fixed is if you're scalping, then you know what you're going to get. But anyways, blah, 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 blah. It doesn't talk about here. Yeah, what you don't see here is how it handles swaps and interest rate payments. So that would be something that you might want to ask them. And I'm clicking on something, more details here, blah, 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 blah. Yeah, it doesn't get into that, so you might want to ask them. The one thing TradersWay does offer is if you have more than $50,000 in the account, they'll give you a VIP status, which is as close to prime broker offerings as you can get. which is, even lower spreads and lower commissions and, all that kind of stuff, and free VPS service. I don't know. Like I said, I'm not the salesperson, so look into it. So, I can give you this, though. Here, a little more detail on the fixed. Nonetheless, swing on by. Yeah, swing on by. Boop, 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 boop. Yeah, Tabista, give him a call. Swing on by. All right, so a lot of interesting things going on. A lot of earnings announcements this morning for U.S. companies. And a lot of German news. The inflation type data is starting to come out. But most importantly, what I'm watching on a day like this is when the S&P 500 comes down. Let's see that. Let's do apples to apples. Let's do this over here. 5-minute chart on the USD yen. Life is great. Life is grand. Life is good. All right. Yeah. When the S&P 500 is coming down, it makes me wonder about risk on and risk off conditions, and what the market is going to do. And if the market's going to come down, and this is the S&P 500 again, if the market's going to come down today, and it doesn't look bullish at the moment, but it is at support. That's what I'm trying to point out, that it could even come down a little bit more, and then you'd probably want to buy it, right? So if it stays above this line and gets closer to support and bounces, then the yen pairs may go up, meaning the Japanese yen would go down, which means it would be risk on conditions again. But if we broke through this level, that would be bearish on the medium term. And I say medium because it'll come down here and then probably rally up a little bit and come back down. Okay, and I can't even fit this in there, but anyway, something like that, right? And I don't really want that to happen. And if that does happen, then we're probably going to come back down to 2100. And then I would imagine probably back up and then back down. And you could probably tie this into the Fed cycle, probably like monkey around like this until September Fed meeting. You know what, Peter? That is amazing that you said that, because in my meditation this morning, I'm like, you know what? We should look at the VIX today. No joke. So let's look at the VIX today. Yeah, totally. I'm cruising, I'm bruising, I'm never losing. Around the way is where I'm from, and I'm from Manhattan, and I'm not a bum. Here we go. Just trying to find the right one. This doesn't look that great. Oh, great. Full screen drops it. There we go. Ah, come on. So that's not a very good chart. What's a better chart for this stuff? Pricing table. Do you have one? Oh, you like Market Watch? Okay, I have no problem with Market Watch. Let's go there. Yeah, okay, so, okay, that's good. We'll go to a 5-year. Well, let's do 1 year then. Life is grand, life is great, life is good. Okay, yeah. So, let me zoom in, because I have a hard time seeing that. Okay, VIX. a little overview of what VIX is, and this isn't a great chart either. So if anyone has another one, how about a different one than that, Ben? VIX has to do with fear. Its nickname is the fear index. And what it really is, if you've ever been on the trading floor of the S&P 500, and you probably have not, so let me get my drawing tool. You walk onto the floor and you find yourself in the soybean meal trading pit. So you got to turn left, and you got to go into another room. And these rooms are like football fields, indoor basketball courts, basically, right? So you go into the other room, and you hit the S&P 500. So let's say you hang a left, you go 100 feet, and then on your left again is the S&P 500. And on the other side of that is the S&P 500 options pit. All right, so let me draw a map for you. Where's my drawing tool? Come on, Bubba. All right, so here's the main door to the trading floor. You're in soybeans right here, and there's kind of a wall here, and you go here, and this is the S&P 500, and this right here is the options pit on S&P 500. Okay. Okay, let's try this investing.com one. All right. And so what I'm just saying is there is a relationship between the two, and the reason the two pits together is perhaps, someone that's sitting up in the rafters giving signals down to the guys in the pit to buy and sell S&P 500 futures. Maybe they're also throwing down the options. Okay. And an option, oh great. Boop. Let's try this one. An option, this one's kind of neat. Nah, let's go to the other one. An option is supposed to be insurance. Now, I know a lot use options for speculation. Is that Harvard? Yeah, there you go. You're supposed to use options not for speculative purposes, but actually for hedging. And you would only hedge if you were fearful. Now, a lot of people always hedge. It just lowers your risk, and you're locking in maybe a smaller but almost guaranteed profit. So you lower your downside, but you also lower your upside, but you're kind of guaranteeing yourself whatever profit, right? Great. That's what an option is traditionally used for. It's just a cheap way to hedge the downside. So let's say you buy the S&P 500. I got to use this hand. Okay, let's say you buy the S&P 500, so you want the S&P 500 to go up. You think the stock market's going to go up, and you're buying a S&P 500 futures contract. Okay, it's a derivative of the underlying 500 stocks. Okay, great. So you want the S&P 500 to go up, but what if it goes down for a while? This is a problem. So what you do is you purchase a type of option that makes money if the stock market goes down. We don't need to get into the mechanisms of options trading, but it's just the idea. And it doesn't cost very much to have this option. Because if the S&P 500 does go up like you thought it would, you make money in your futures contract, and you don't really lose anything on the option. Now, you had to buy the option. It cost you some money. It didn't cost you very much money. And if it goes up, well, your option is just worthless. But you can look at it as like insurance. Okay? So you buy the futures. or in this case, let's say you buy the cash is usually what it's, right? So you buy the stock market, and then you use an option to hedge at like an insurance policy. And you probably won't need this option, right? It's like you buy insurance on your house. Your house is probably not going to burn down, but I do know someone whose house burned down. So it can happen, but it probably won't, right? But that's why I have insurance. If it does, I'm covered. Great. But you can track how much insurance the market is buying right now. And that's interesting, isn't it? And VIX is relatively new, right? I've been using VIX or watching VIX for, I don't know, 5 years. But I don't think it's been around that long, has it? Does anybody know? Like maybe 8 years, 10 years? I don't know. But I do remember doing a presentation using VIX back in 2006 or 2007 in New York. I talked about the TED spread, the VIX, and some other thing. Oh, the yield curve. Duh. What an idiot. Yeah, so oh, it started in 2004? That's cool. Right? Well, that's what we're talking about. Rita. That's what we're talking about. VIX. Right there. I'm trying to explain it. So anyways, yeah, imagine that back in 2007 to a standing room only room in New York. I did this presentation about how to use the VIX, the TED spread, and the yield curve to predict stock market crashes. Hey, what were you doing in 2007? I still remember it too. It's funny how the thing. It's amazing how you can just remember little details of little moments like that. So anyways, boom. Back to the future here. Back to now. Do you think that noticing professional traders suddenly buying lots of insurance is perhaps a canary in the coal mine, that something has changed, something potentially risky? It's neat, isn't it? What if you could buy tornado insurance 5 minutes before the tornado hits? You know what I mean? You're like, oh my God, I can actually see it. You pick up the phone, you're calling Geico. I need tornado insurance right now. Oh yes, sir, we have 17 just give me the insurance. I can't hear you, sir. It sounds windy. Oh, no, wait. Is that true, Johnny? You got hit twice in 4 years? Wow, that's not supposed to happen, huh? I grew up in Saskatoon, Saskatchewan, and years ago, a tornado came down on the edge of the city, went down one street, and just ripped all the roofs off all the houses. So they built all the roofs back, rebuilt the street, and the same summer, at the end of the summer now, tornado came down and ripped them all off again. Same street, same 15 houses. You're like, what? That's not supposed to happen. Tornado's never supposed to hit the same place twice. It's twice in the same year. How'd you like to go through that, John? If you've done it in 4 years, can you imagine doing it in the same year? So anyways, guys, the VIX, the volatility index at the Chicago board, right? Chicago Board Options, Chicago Board Options Exchange, COBE, right? All right. It tells you when lots and lots and lots and lots and lots of people are buying insurance. Like here. So you see where we are today? 13.9, 13.19, right? Frida, are you listening? Just want to make sure. Yeah, okay, good. So currently we're at 13. Last August, just about a year ago, it went to 55, 53, 29. What? Last August, we went to 53.29. What? What? 53? We're at 13. Look at over the course of the year. We kind of went from a low of 1088, so let's say 11, a low of 11, and maybe what? Moderate, average is probably closer to 20, and some peaks maybe 25. Okay, and it went to 53. Well, that seems like a problem, doesn't it? And I would venture to guess, I'm not looking at it, but I would venture to guess that wasn't a good time in the stock market. So August, June, July, it's this year. This freaked people out. Oh, no, July. Wait. Duh. That's this year. December. Come on now. All right. Here we go. This is August in the S&P 500. See, July. So right in here. What do you think? Do you see the relationship? Okay. So there's a couple of things going on. By the way, let's see what a 5-year will tell us. Okay. What I was hoping to show you was the 2007, 2008, that kind of stuff. I can't quite remember, but I think it was like 180. And I remember trying to explain to people, I'm like, no one even had a chart that would go up to 180. They're like, there was no 180. Like, what are you talking about? 13 is low, 25 is high, 40 is real bad. But what's 180? Right? 180? What the? I don't even know what that is. So that's how bad it was in the prime time subprime. Okay, it got like redonkulous, right? Like it wasn't even a number. It was like, hey, I just won the lottery, and you're like, so how much did I win? And they're like 100 billion jillion. You're like 100 billion jillion. Holy crap! I don't even know what that is, but it sounds really good. Oh, was it 95? Say whatever, 95, whatever. It just doesn't exist. So look at 95. I mean, you have to double this. So how's it calculated? So you have to look at the ratio of options being purchased on the S&P 500 relative to the amount of contracts being traded. I believe is how they do it. Okay, how they do it. Probably not relevant to this conversation. It's just 60 is bad, but what's the opposite? What's the opposite when we look at this? where we were way up here at 25 something, but we're cruising around 11 and 12. The 52-week low is 11, and we're at 13. Okay, we got to 30 once when the stock market crashed early in the year, and then recently it spiked a little bit on the Fed, and now we're back down to here. Now it's a little too low. It's not supposed to be, let's say, 13, or how about this? What if it dropped to 8? The interesting thing about that is it can predict, or at least prepare you to be ready for the stock market to crash. See, they buy options because it's crashing. So this looks like the VIX going up, and it peaked in February. But the stock market crashed in January. Okay. You could see where we were at 15, and it started going up in November and December and all that kind of stuff. And at that point, it was low for relative to that period of time, right? So anyways, long story short, complacency. Thank you, Sally Pup. That's the exact word you're supposed to use in this context. Complacency can alert you to a potential turning point in which you may want to consider selling the stock market. Okay, so in a period of time when you drop down to like 11 or 10 or 8, see, I wish we could look at a little bit more than 52 weeks, but maybe historicals. Like all-time lows, and doesn't really tell you anything there either. Come on, Market Watch. Daily. How about a decade? That sounds good. Maybe weekly. That might not be enough. So let's. All right, there we go. Okay, so you can see, being around 10 or 20 is fairly normal. 50, right out bad. 40, right out bad. 95, just redonkulous, right? So you don't want to be too low either. And so when you see the market complacent, the stock market is obviously rallying. That's why they're complacent. Why would you buy flood insurance during a drought? I'll tell you why, because if it does rain, the ground is not going to soak up the water, and your house is going to flood. It just doesn't seem like the right thing to do when you're in a 3-year drought. You see what I mean? So no one buys flood insurance. If the S&P 500 is going up and then going up and going up and going up and going up, why would you waste money on insurance? But that in of itself can predict a potential turning point where everyone is long the S&P 500. Okay? And then you come into massive resistance. And everyone's long and no one has insurance, which means there's no protection to the downside, right? So what happens if some people start taking profit at resistance. And just remember too, smart money is getting in here, right? And then moderately smart money. And where do all the chiropractors and the dentists get into the stock market? After it's been rallying for 9 months, right? Then they get a big stock tip. And they're like, yeah, I need to buy something here. And what happens? The smart money cashes out. And the dentist's money and the chiropractor's money goes to these guys. That's it. Transfer wealth. Okay? And the complacency is when no one is buying insurance to protect themselves from the downside, because when that happens, the market crashes fairly hard, doesn't it? Because it's painful. And how do you get out of a bad trade where that's losing money every day if it's not hedged? You sell what you bought. You sell your dog with fleas. Right? You sell the milk cow because it stopped producing milk. You hope that someone else is going to buy it and maybe eat it. So complacency is a very interesting thing that you can watch. Oops. So one thing you can do now is look at what numbers are complacent and what numbers are fearful. Well, I think if VIX is around, I don't know, let's say near 20, put some Bollinger Bands around 20, 2 standard deviations above 20, so somewhere between 17 and 23 is a fairly okay area. Anything above 23, people are fearful and they're buying insurance above, let's say, the norm, and maybe the stock market's already coming down. But the most interesting thing is, what do you do when you're at 11? And 17 is kind of the norm, right? If I said 17 to 23 is the norm, nobody buying insurance is just as informative as everybody buying as much insurance as possible, right? And especially if it's down to like 8 and 7 and 6, now you're just like, what the heck is that? So, right? And then you start looking for resistance. See, that's too much. Well, let's try to draw this. Let me get let's change this to a line, a tool, draw a line. Okay, and I'll make it red so it's easier to see. So you watch the S&P, or you watch the VIX, and halfway, this is, yeah. If you're below that red line, that should be red alert, I think. Okay. And what's happening now that we're at 11? Remember, it was 11 just a couple of days ago. What does that potentially tell you that we were at 11, which is close to our red alert line? What should we look for? What's the heads up? Due for a drop. Yeah, it hasn't happened yet, but they're trading naked, right? Think of all these guys that are just so confident that they're not even buying insurance. And I thought they called themselves hedge funds. Well, they're not hedged. Okay? I think it's more important than knowing that everyone on the planet is buying insurance. Well, that's because the stock market has already crashed. So you'll hear in the news, they're like, oh, the VIX is up and the S&P 500 is terrible. Yeah, but that means it's already happened and it's not relevant information anymore, is it? Who cares if the stock market dropped over the last 5 days? Who cares? You've already lost money. So, just be careful. Here's the S&P 500 now. And when we were in this zone here, let me mark this with this, okay. When we were up here, the VIX was at 11. Peter says when you see it spike, start looking to buy. Yeah, maybe. It's not quite the same, but maybe. But yeah, it's extreme, and the market. I like to trade in extreme market conditions because it helps you understand which way the market's going. Okay, so here we are in a bit of a range, but when VIX was at 11 and we were topping out, isn't it funny how I drew this line down? Funny how, all right, like a clown. Okay, VIX hit 11 when we were at an all-time high. Too much complacency, perhaps. And that could set you up for a nice little trade. But I think the news for you is when you hear, for example, you're listening to the news, driving somewhere and you got Bloomberg radio on or something. I like to listen to Bloomberg TV or Bloomberg radio while I'm in the shower meditating. So if they say, here's this morning's volatility report brought to you by the CBOE, where you can trade VIX. Okay, great. And then you hear, the VIX yesterday fell to 9.8. And you're like, what? That's where you should get out of the shower now, because you're like, the stock market's going to crash, right? Now the cool thing is you can trade VIX futures now. You can trade a derivative of the derivative of the derivative. The S&P 500 futures is a derivative. Trading an option on the S&P 500 is a derivative of that derivative. But if you're buying futures contract on VIX because of what's happening in the options pit on the S&P 500, and now you can just say, all right, I see a triple top on the S&P 500, so now I'm going to buy the VIX futures contract. So you see a triple top on the S&P 500, in particular around earnings season. What does it tell you to do? How would you make money trading a VIX futures contract? Did I lose everybody? Like this is something either you didn't understand it or you just don't care. It's all right to tell me you don't care. It's totally cool because our prime focus is Forex. But if you see a triple top on the S&P 500 and VIX at an all-time low, you might start looking at buying Japanese yen. Sally Pup, in that case, you would buy the futures contract on VIX because if VIX is at below 11 or 10. If VIX is at 9, which means nobody's insured in the stock market, and then suddenly you see a triple top in the S&P 500, that means if we know the triple top is a reversal pattern. So if the S&P 500 is set to fall, there's going to be lots of people that are going to want to buy insurance very quickly. So, therefore, I would imagine as they're buying options, VIX would rise, and you're in a VIX futures contract, which means it would appreciate in valuation. Okay? Meanwhile, so you're selling S&P 500 futures, you're buying VIX futures, you're buying Japanese yen, okay? And you're probably selling oil. How does that make you feel if you did all of that? Yeah. Well, but not all risk-offs are the same. So one thing that you can do to qualify the scenario is to say, hey, what's going on in the S&P 500? And then you can say, well, let's take a look at the VIX. And is oil at resistance? What are the yens doing? Do the yens look like they're set to fall? And now you're going through a sequence. How would that affect the dollar? And if it brings the dollar down because foreigners are getting out of the S&P 500, they're going to buy Japanese government bonds. That's why the yen gets strong. You see what I mean? So that means the dollar's going to weaken as well. And if the dollar weakens, maybe gold goes up. Especially in an environment of negative interest rates. And all of a sudden you're just like, oh, right on, Russ. Always happy to do. Where were you in 2007? We could have sat down and talked about it. Yeah, you don't have to re-listen. We can always just talk about it. And I've done it before. You could probably Google that and check the YouTube channel. IQ off the charts, maybe. But I would rather say I just happen to have started before you. But I'm smart for a supermodel. That's good. Yeah. Oh, my pleasure. You should have seen though, and I'll never forget it either. I'm in this room. I'm standing up on stage. There's, I don't know, a couple of hundred people in front of me sitting. They were actually sitting in chairs and everything. And everyone was losing about 50% of their net worth. I was very mad at the time at the world, particularly the market, because all the smart people were idiots. And I was really, I was quite young as far as being in the market, right? I was fairly new, I think I was licensed and registered back then. But even then, I was fairly young, and so I assumed that professionals were professional. Okay? And amazingly, and I guess I should be thankful that it happened fairly early in my career, not too early. I mean, I was smart enough to understand what should have happened, and then I watched nobody do what they were supposed to do. Then I got really mad, and then I guess I probably realized there's a place for me in this world, right? But that presentation, I explained to people using the VIX, the TED spread, which is the difference between short-term and medium-term interest rates, yields, right? And then yield curve analysis. And in particular, I really like yield curve analysis. And I just explained how a 5-year-old, well, that's probably not true, a 10-year-old, okay, my 10-year-old would understand how to predict the stock market crash. And, and within 10 or 15 minutes, I guess I probably take about 15 minutes to do it. After about 15 minutes, I told everybody in the room how easy it was to predict that the stock market was going to come down, and why they shouldn't have lost 50% of their net worth, especially if they had a mutual fund manager or a wealth manager. Someone, they were paying someone 1% of their net worth to oversee their retirement account. And it's just shocking and bewildering to me that these money managers didn't see it coming. I mean, just like off the charts, ridiculous, negligent, and almost criminal. Yeah, Forex made it. Actually, Russ, back in, 2002, I went to a Forex Made Easy user group or something. Not like a sales pitch, but a group of people that were using Forex Made Easy. And it was some meeting at some guy's loft. And I remember I'm checking out this Forex stuff, and these guys seem to know what they're passionate, let's say, about it, and they want to talk about their big lights, little light strategy. You know what I mean? So I'm like, I'll go talk to them. And I'm like, because I'd never even seen it, right? So you bought it way late too, Russ. And anyways, so I sit there and I'm like, I might be stupid or something, but aren't these guys trading a MACD? They paid $3,000 for a MACD? I'm like, what? Do you guys remember that? Or do you remember the big light strategy? Oh my God. It just, oh, jeez. Anyway, you don't need to know. It was just, if you had the daily MACD going up, then the 4-hour, and maybe even the weekly MACD all going up, you buy it and hope the hell it doesn't go down. Yeah, they were all they paid $3,000 for a MACD. So good thing you guys didn't see it. I'll tell you a little bit. When I first started trading Forex or even watched Forex, early 2000s, like literally a chart was new in the world. Just a chart. So people were paying $3,000 for a MACD. So be happy that that's not you. That you don't have to start in a world like that. And I think the only Forex book out there was Forex Made Easy. Okay? Isn't that interesting? So you're very, very, very lucky, guys, that you have access to resources and talent that are here to help you. Just having a chart. Like my first Forex account didn't even have a chart. You'd have to pay something like, $125 a month for charts. So anyways, Russ can attest, and that's really late though, 2006. That's a little bit surprising. But I guess you only know what you know at the time, right? But I think it was already dead by then. But oh yeah, they had a book. It was like the only Forex book. I didn't buy it though. Yeah, I don't know. You're just lucky. Yeah, you're just lucky that it's not as difficult as it used to be. Like I said, if I was smart and intelligent, I would not be a Forex trader. Because I would have looked at this and said, look how stupid this Forex market is back in 2002. Right? I'm like, what kind of idiot would trade this? But I'm not that smart, and I'm very stubborn. I'm an entrepreneur, so I have founder's-itis. When the ship sinks, the captain stays at the helm, That's the type of person I am. So I never gave up, no matter how stupid it was. And I stayed with it. Wow, you went to in 2007. Nothing significant. That's interesting though, James. 2007. I guess it makes sense, but like I was already like rolling around doing public speaking and stuff on Forex by then. But maybe, I guess so. I forget. I do remember running into a guy at the FXCM Expo. Does anybody know what year that was? That might have been about 2007. So maybe that's right. And I had met him. He said, "You know what? I do remember. It's the first FXCM Expo, not the one in Vegas, the one in New York. FXCM Expo, New York. Hang on. So I'm there, and I didn't speak at this conference. I was just there. It was a way to write off a free trip to New York and my taxes, right? FXCM presents. No, there's the second one's in Vegas. Where's the first one? I met you a note. Oh, wait, what? Is that right? Hang on. Tell me that story in a bit while I do this. Yeah, Kudlow was there. It's this one. June 2008. Here, let me pull up this. 2006. So I'm there at a trade show. So by the way, this is where I ran into like TradeTheNews.com, and I think even FX Street was there. It was the first time they had ever gone to the United States. Like, it was great. But anyways, okay, so it's June 2006, and I'm at this trade show. And I remember so many details about this. This is where I ran into Boris Schlossberg, and he would talk about how many ticks he was making trading Forex. I'm like, what the hell is a tick? It just drove me nuts. I'm like, it's a pip. It's not a tick. It's a pip. Like, but anyway, so I'm just like hanging out with somebody. A group of boot campers, right? And we're just shooting the breeze. And this guy joins the conversation, just a stranger, and we're just shooting the breeze, having a good time on this little tiny little exhibition booth floor area. And he joins the conversation, and he's like, do any of you guys trade a Forex Made Easy? And we're like, oh my God, are you serious? Do you trade Forex Made Easy? And he's like, yeah, I just bought it like today or yesterday or something. And he's like, you don't like it? I'm like, oh my God, how much did you spend? And it was thousands. It was like $6,000. We're like, holy crap, are you joking? So he said, well, I can get out of it. I mean, I shouldn't be in this thing. And we're like, oh, man. All you need is like, you need a trading platform and stuff. And why don't you join boot camp and I'll just teach you how to do technical analysis for yourself. And he's like, you do that? So he got on the phone, a payphone by the men's room on the floor, on the exhibition conference floor, right next to the water fountain. He's on the phone calling Forex Made Easy to get his $6,000 back. I'm like, yeah, good day, man. Totally worth me flying to New York to save that guy $6,000. Made my day. And I met Forex Mate, or I met news.com, and I got to hang out with some FX Street people. I think I took one out for lunch. That's where I met Steve Nissen, who taught me all about Japanese candlestick patterns. That June 2006. So Jimmy, so you met me at a New York one in 09, huh? That's cool. You might have been at the one about the VIX and the TED spread and the... So, anyways. So, long story, I know this has been a babble session, but I'm preparing for a possible yen move. Why am I preparing for a possible yen move? Bank of Japan. Thank you, Daniel. Yeah, I just generally don't do those speaking engagements as much anymore. Just, I don't know. But anyways, yeah, so the BOJ news, right? And I also need to keep an eye on whether I should still be in these trades or not. Like, remember yesterday, I think, or even the day before, I said I'm in a real spot to be concerned about whether I stay in the Kiwi yen or not. Russ, remember, they're not doing things for the market or against the market. Okay? So the Bank of Japan is going to do what they believe is going to be in the best interest of Japan. And they do have the political clout and power at the moment to do something. Whether they do it or not is yet to be known. Okay? But just the thinking, like it's the language, like, do you really think they make, whoa. The market is prepared and willing and able to go along with it. And if the Bank of Japan even just hints that the next meeting they'll do it. Doesn't even have to be this meeting. They just have to say, yeah, we're seriously considering the next meeting stimulus. And they'll say it one way or the other. As long as the market translates and interprets what they say as their, as a stimulus or additional quantitative easing or whatever it is, the yens will move. It's done. It's over. Boom. And they'll move 300 pips tomorrow. Will they move 300 pips up or down is going to be a difficult thing, right? Now or never, but no. See, guys, don't paint yourself into corners and stuff like that. It sounds like you watch too much CNBC, or you're in an ultra hype trading room or something. No, 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 no. Do or do not, they have to. They don't have to do anything. They could totally do this next meeting. What do you mean now or never? You know how long I've been watching, the Japanese yen? Do you know how long interest rates have been low in Japan? Like the entire 15 years I've studied the market. Right? Like it could be another 15 years, Russ. Like, so just don't overhype yourself. Just right? Boom. It's just, there's an event coming up. It will probably move the market if it's a non-event. If it is an event, it will probably move the market. To what degree it'll go up or down depends on what is said or what is not said. And then we'll just move on to the next meeting. Or like, when's the next meeting after that? Oh, well, we got another one in October. Good. All right. Well, we'll see you there. Right? So there's just always a next thing. There's never a now or never. And in fact, let me tell you about being a trader. Okay? Are you listening to me? Okay? When it comes to such things, if you put yourself in a now or never scenario, and I hear it all the time, what I've learned over the years is when you get a now or never situation, it's going to be at least 6 months. If you think it has to be today, it's going to be probably 6 months from now. And when you're not even looking anymore, you've totally given up, you're not even thinking about it anymore, boom, it's gone. And you're like, dumbass, what? Right? You just, boom, you missed it. And you're like, I knew it was going to do that, but why didn't they do it way back then when they just had to? Well, you were the one that painted yourself into that corner. That they have to do it now, and if they don't do it now, they'll never do it. I don't buy that at all. I think that's wrong. So if I could, I would just remove that from your psyche. Okay? You know what I mean? There's just the next thing. There'll be another thing. Don't worry about it. So I'm just simply preparing for tomorrow. I'd like to be in some trades. I don't want to be in bad trades. This one, I'm only up 30 pips again. I was up 50 or 60. And we're going into that moment where I still haven't decided if I want to hold, right? I have a stop down here. It's not the world's greatest stop, but I don't want to lose like a couple hundred pips, right? So I think my stop is about, 150 or something away. And, I'm below this area, but I still might get out at break even. I just haven't quite decided. But it's something that I need to decide, right? So what do I need to do to decide? Well, Russ, it's more of an issue of, and it's not being cautious. It's just, don't get excited, bro. It's just money. You're going to be sitting here, Russ, for the next 25 years, and they're going to be freaking out on TV. Oh my God, oh my God, oh my God. And you just sit here and you just buy it, support, sell it, resistance, and you prepare for these events in advance. And it's just another trade. It's just, whether they do it or not is only interesting in the context of how that'll affect things over the next couple of years. And you'll study your macroeconomics. And what it'll do is it'll open some doors to new opportunities and close some on some old ones. And everyone else is hyper jumpy over everything. And you're just an observer to the market, and you're going to make money along the way. And, you buy dips in a rising market and sell rallies in a falling market. And it's just, you need these events just to simply provide you with the volume and volatility you need to make money from all the ultra hyped up emotional, people that get in late, get out early. You know what I mean? So I'm trying to change your excitement into more like an astute calmness, I suppose. Right? I mean, it all matters, but I just want you to make money. And I think the ones that get amped up and say, they have to do it now or never. No, whoa. I'm just preparing, bro. Right? I'm just preparing. And I'll either be in this trade tomorrow or I won't be. And I hope I'll make money on it. I wouldn't be shocked if the BOJ doesn't do anything. Especially if you get this ultra hyped up idea. It just tells me they're not going to do anything. So, right? Well, look, you can see my positions, Hans. It's right there. Oh, I guess you can't tell. Well, it's green, so it's buy. So I'm long here. Like I wouldn't be, right? So anyways, and this one's profitable. I'm in an Aussie yen as well, and it's not profitable. But whatever. But I'm not. It's not a lot. But here, look. This is why we're having this conversation today. And I'm taking a while to get to it, but I'm trying to frame everything. I have to decide whether I hold this or not. Do I, going into this big BOJ meeting that apparently is ultra important? Well, jam the stop. That only means I have an almost guaranteed chance of getting knocked out. Well, I don't want to be knocked out. I want to be in. Until I decide I don't want to be in, and then I want to be out. But jamming a stop may be out of fear. So I have my stop's like 150 pips away, 200 with this profit built in. I'm cool, dude. Right? Decide if you're a bull or a bear. Right. So I need to look at various components of the intermarket to see what other people are thinking. Because they're the ones going to move the market. And money needs to flow for Forex to move, and what makes money flow has to do with things like how are the bond markets, how are the stock markets, are people greedy, are they fearful, are they complacent, or what's going on? So what kind of things could I look at to decide here and now whether I should stay long Kiwi yen? I'm only up 30 pips profit. It's not a lot. It may not be enough to carry me into Asia, right? So I need to make a decision here, and I'm still not quite there. What kinds of things could I look at for me to make a logical, intelligent decision about this risk event coming up? First of all, I'm front-running the risk event, so I'm in the market, which I think may be the right thing to do. But I have to determine what kind of risk. So what could I look at, guys? Dan, I remember the last time there was a major move 2 years ago, maybe. I was in something like 12 trades or something. And it was either the Swiss National Bank or the Bank of Japan. I think it was the Bank of Japan because the Swiss National Bank was a bad situation. But anyways, we got the intervention, and it happened while I was coaching. So it happened in New York for some reason. And all of a sudden, everything jumped 300 to 400 pips, and then went another 200 or 300 pips. Like, so let's say it moved 400 or 500 pips. And I was already in like a lot of trades. I'm like, boom. And like, I made like over 1,000 pips in about 7 minutes. Okay, so see what gold is doing. Okay, anything else? Nikkei? Yeah, okay, yeah. Could you think of anything else? Like maybe stuff I talked about today. How about the S&P 500? How about VIX? Yeah. Okay. The market is very complacent, and we triple topped on the S&P 500. That's a little scary. Right. So, well, Hans, then you're very confused. Right, Hans? You can't be both. Yeah, it's true though. You're one or the other, or you say the stock market's going to come down a little bit. That isn't necessarily bearish, maybe. Maybe you're more neutral and you think, we could have a pullback for a while, but then it's going to rally back up again, right? So that's why you have things like stop losses. That's why you could be short-term short, but long-term long. So long-term you're a bull, but you think now is a good time to, thin the herd of your positions, right? They call that balancing. Okay, so you're overweight on Kiwi yen. So maybe you should, take some of the trades off that might only be up, 1 or 200 pips. But the other trades that are up 700 or 800 pips, maybe you leave those. You can't do that in the United States, however. So like if you have a portfolio of trades and you have 5 trades open on Kiwi yen, first of all, they average them, which sucks. But let's say you made one last week, it's profitable, but not much. But you also made one 6 months ago, and you're up 700 or 800 pips. And you want to get out of the trade you made last week because it's only up 70 pips. You're pretty sure it's going to get knocked out of break even based on what you see on the S&P 500 and because of the VIX. So you decide you want to get out of that trade from last week. What happens if you trade in the United States of America? You actually click on that trade and say, close. No, it closes the first one, the one you made 6 months ago. Which means in the United States, the National Futures Association does not want you to carry trade. Nor do they want you to hedge because, I don't know why because. That doesn't make sense to me either. Maybe the carry trade thing, they're worried that, if the entire market loads the boat going in one direction. But, if everyone wants to buy Apple, is there a law about too many people being long Apple at once? I mean, the rules are not the same in other markets, so that's weird to me. But what kind of logic is there to not allow someone to hedge? I thought hedging lowered risk. So, I don't know. If anybody can figure that one out, you let me know. Okay, Frida wants to know how to select a pair. What time is it? How much time? Oh my God, look at the time. I don't have enough time to do it today. Remittance. Yeah. Pull up your peso, guys. The peso is going to be strong in the next 5 days. Maybe not today, but be prepared. If not Friday, then certainly by Monday. Mexican peso is going to get strong. There's a $2.1 billion trade going into the market. But don't tell anybody, it's a secret. But it's nice to know 2.1 billion. That's a big trade, right? That's cash, baby. See, I told you I'd teach you how to trade like a bank, right? It's helpful to have inside information, isn't it? I don't think I even got peso up on this platform. So, anyways, is it Thursday? Yeah, it's Thursday. Are you a premium member of FX Street? If you are, we'll get together tomorrow. It's pretty expensive. It's €1 a day. I don't even understand the point of charging €1 a day. But it's €1 a day, so I don't know why you wouldn't want to be. Yeah, I don't know why you wouldn't want to be, but it's funny. Yeah, they charge €1 a day. So yeah, so I'm over at FX Street tomorrow for premium members. So if I don't see you there, I'll see you on Monday. But is Monday August? Gee whiz, I'm going to be in Africa soon. How funny is that? Yeah, Monday's the 1st, bro. Monday's going to be great. New weekly pivots, new monthly pivots. It's great. How many people here are going to be in Johannesburg with me? Frida, right on. Be really nice to see you. I bought a new sweater. That's how excited and emotional I am about it. I bought a new sweater. Somebody said it was going to be 45 degrees Fahrenheit. What? Fred, what time? Like when? Monday the 8th, is it? Monday the 8th of August? Should be good because it's ripper hot here in Georgia. So to have 1 week of winter. Yeah. So that's it. I guess it's just me and Frida. That's cool. I thought more people would be there from the people in the room. Yeah. No, thank you. Yeah, that's a ways off. It's just open up the calendar. So yeah, so first Monday is the 1st. So you're going to have daily pivots, weekly pivots, monthly pivots. How lovely is that? Very good. And so now, I mean, look at this Kiwi yen, man. I still seriously have to decide what I'm going to do. Having it go up makes me feel better. But, it's a false hope still, right? Because this is the resistance, right? That's where a bear is going to sell. Okay, so I understand it's a false hope. The next thing that's probably going to happen is that. And somewhere between now and then, I'm going to have to decide whether whether I stay in or get up. If it does this, obviously, I'm golden, right? But the stock market's going to open in 15 minutes. We're at resistance. If someone trades this like a lower low, then it's going to come down like a ton of bricks. Oh, Adam, I'm doing a Forex training event. So, fun. Pleasure. Yeah. So it's one of these years where I'll be in Asia, Europe, Middle East, and Africa in the same year. That's pretty cool. I love Stockholm, Hans. My friends were just in Stockholm, and they were telling me how pretty it still is. Sally Pup, what do you mean? Yeah, well, I am Australian. G'day, mate. Ripper. Yeah, yeah. Yeah. Yeah, actually, I'll be in Africa on my Australian passport. Yeah. Being Australian is great unless you're in Eastern Europe. They don't like Australians in Eastern Europe. Like, who needs a visa to go to Czech Republic? Well, only Australians. So anyways, I got to jump, babe, but it's been great. It's been real. Peace on earth. May the pips be with you. May your profits be above average. Oh, and Mexicans. I didn't know Mexicans went to Eastern Europe. How rude! Come on, what a yeah. Now's not the time for hatred, right? Cliches, right? So I'll see you tomorrow. Luis, are you from? Are you Mexican? Oh, Mexico. See? Yeah. If it wasn't for the recent violence, you know, Mexico's awesome. But they got to do something about the, right? You got to do something about the violence, and the $7 Corona. Those are the two worst things to ever happen in Mexico. Drug cartels and the $7 Corona. What the hell happened? $7 Corona. Yeah, they must filter the water now. Amazing. What happened to the good old days where it was like 2 for $1 with a free shot of tequila? So, where do you live, Luis? Oh yeah, sure. Is that north, south, east, west? Oh, south or South Mexico City? West. Are you up in the hills? There are hills up that way? Oh, that's got to be a beautiful part of the world, man. Holy smokes. Really? That sounds like fantastic. You totally have to do a Forex event. See, like I have to go to South Africa because South Africa demanded it. Particular Ryan from Johannesburg. He's like, you're coming to Johannesburg. I'm like, really? He's like, yeah, you're going to come here. I'm like, cool, right on. He's just like, I'm going to make it happen. You're coming to South Africa. That's it. You're going to make a difference here. So I'm going to make that happen. I'm like, oh, cool. Yeah, he's been busy. Yeah, he's been busy lately, basically setting up the event and doing some other things. Yeah, you know, James, I haven't been to New York City in so long. I am almost desperate. Yeah. So, my gosh. So you would want to meet up if I did a trip like that. But the thing is, I don't think I'm going to be there anytime soon. I'm going to be in Boston the weekend after I get back from Africa. It's like, oh my God. My son and I are doing a tour of MIT. My neighbor's like, why are you taking him to MIT? He's only 10. I said, yeah, well, that's where he's going to go to school. I'm taking him to Boston. We're going to do a tour of the campus. We're going to meet some of the staff, talk to some of the students, buy MIT t-shirt, go to Harvard Square and have lunch. Like 10 years old, he's ready. Right? Because the thing is, here's my theory, guys. If your child by the age of 10 or 11, right? If they don't have a vision of their future, if they just live their life by what you say, do this, don't do that, this is good, that is bad, let me tell you. Well, they're not going to listen to any of that crap when they're 15, 16, 17. They're like, I remember my dad telling me to never, ever do this. So I think I'm going to try it to find out why he said not to do it. You know what I mean? So it's not even motivation. It's just like they need their own path. And all you can do is kind of influence the path to say, hey, when you're in high school and that loser offers you drugs, you need to be able to say, no, man, I got Science Olympiad, I got my AP Math that I'm doing, and, you know, in 2 years I'm going to be at MIT. I'm doing stuff, and drugs are just not on my path, bro. So, I can't, no. You see what I mean? Like, they have to, like, want that. They're like, no, you're a loser. You're going to be sitting here doing drugs your whole life, but, you know, I'm going to be off. I have important things to do with my life, and I'm just too busy with all my homework and my math and my stats and my engineering thing and these after-school things that I'm doing so that my application to my university is going to be solid. I mean, sorry, bro, I just don't have time to sit here and do drugs with you. You know? So that's what I'm trying to do as a parent at this point, is just to say there are choices in life, and you're going to need to make these choices essentially on your own. You know, daddy can't be there every minute of your life. So I want to show you the good and bad of everything. And by good, I mean this is what your life could be like. So at 10, I want him to talk to a 20-year-old that's at MIT now and say, hey, what are you studying? How did you get into robotics? What kind of math is required? What were you doing at 10, 11, 12, and 13? What's it like to be here? What do you plan on doing in the future? You see what I mean? And the quirky, nerdy little kid doesn't have to be the one that doesn't get on the football team, doesn't date the cheerleader, so instead he turns to Dungeons and Dragons and heroin. No. You can you know, you can do other things. And if you go to a place like MIT, there's lots of quirky people that are changing the world. So I tell my children, don't be average. The world has plenty of average people. The world and society in particular needs people to do important things for them. Someone needs to build the building. Someone needs to design the bridge. Someone needs to be a leader in government. Somebody needs to change the system. Somebody needs to dream of the new technology and then have the capacity to carry it out. And capacity not only is intellect, it's working hard. And there's plenty of people that are just going to do basically nothing. But they need people like my children that will have a positive impact on society. So anyway, so that's what I'm doing when I get back from Africa. So, hey, peace on earth. May the pips be with you. May your profits be above average. Good luck on the stock market open. And I'm going to pray for my pray for my Kiwi yen and all the others. Cheers.